Welcome to Why Commodities with James Cordier. I'm Joe Pardavila, and we are exploring the world of commodities with the man, the myth, the legend, James Cordier. James, how are you?
I'm doing well, Joe. How about yourself?
I'm doing great. And so since it's our first show together, I figure let's get address the 10,000 pound elephant in the room, if that's even the thing. People in the commodities world know who you are. They know you have an extensive career of success, but you did have a blip a few years ago. So let's go back to that blip. If you can, set the stage, because I know people are going to watch this, listen to this, and they'll Google you if they're not familiar with the history. And stuff's going to pop up that, you obviously aren't happy with the way it turned out, but now you're bigger, badder, stronger. So let's go back to that moment and how it all shook out.
Joe, from 2008 to 2018, we were delivering alpha. We had a 6-month wait for new clients to get on board with us. We were delivering an annualized return of 17% over 10 years. To do the math, that's well over 300% return. All the TV stations wanted to listen to us and get our opinion, and can we get James on set as soon as possible, because our ideas and our thoughts about different commodities were perhaps the most desired in the commodity industry all over the globe. And in 2018, we had a position on in both crude oil and natural gas that just absolutely got away from us. We did everything we could to protect our clients, exit the trade, and we were unable to do so. And as Ray Dalio mentioned in his book, Principles, everyone sooner or later is going to have their crash. And in 2018, I certainly had mine. A lot of people feel one of two things are going to happen after that. One is maybe I'm not cut up to be in the business. On the other hand, if you're one of the best in the industry, when the crash happened, perhaps you're better, smarter, and more prepared now in the future. And that's the approach we're taking. I certainly think we are.
That's awesome. And you talk about 18, and for a lot of folks that are not involved in the commodities industry, they know about the crashes of, the dot bomb, 08. If you could just set the stage, what happened in 2018 that it all went wrong? Because like you said, you were the go-to guy when it came to commodities. What I guess the best way to phrase this is, what did you learn from that whole event?
It certainly was a learning experience. Liquidity is something that we always just took for granted, that if we wanted to get in a position, we'll be able to. If we need to get out of a position, we'll always be able to. Certain commodities have more liquidity than others. Natural gas, crude oil, gold have excellent liquidity. For some reason, in November of 2018, liquidity absolutely evaporated. The more we tried to buy out of our position, the higher it went. The more we needed to buy out of our position. And we had a liquidity crunch. And I just always assumed that I'd be able to get in a position or out of position when I needed to. And on these 3 days in November 2018, we couldn't exit our trade, and it cost us dearly.
Wow. And I'm sure, and you mentioned Ray Dalio's book, and a lot of books mention failure, the love of failure, embracing failure, learning from failure. Looking back at it now and what you've learned and the experience through it, failure sucks, as we all know. But do you think it's made you a better trader? Because that's the thing, like people always say, you don't learn from your successes, you learn from your mistakes. Do you think that those 3 days have sort of formed who you are now, 6 or 7 years later?
Joe, it certainly has. And I think what I would like to do is just a little background. When I would speak to a brand new client, I'd speak to all of them prior to investing their hard-earned dollars. They'd always have one question for me, or at least the most mature of our newest clients would have a same question for me. And they'd always want to know, James, I only have one question. Have you ever had your crash yet? And I would say, what do you mean by that? Well, have you had your crash yet? Because everyone does. And I would always hang up the phone later with John or Mary or whoever the case may be. And I said, why do they keep asking me that? And our most seasoned investors, the people that have been around the longest, knew that everyone winds up having theirs. And they were very disappointed in the answers that I was giving them. I felt so proud of myself. And of course, I would say, well, no, I haven't. And then the call would end. And now I realize why that was not the answer they were looking for.
Wow. So, well, I mean, on the bright side, you now have your crash story when people ask, right, James?
I certainly do. As Ray Dalio mentioned it, it's kind of like hitting yourself over the head with a baseball bat. Principles has just been a fantastic book for me to read and get through the last 5 or 6 years. Bridgewater Capital was down to one person and $4,000 loan from his father, and he turned out quite well. And I think we're going to turn out quite well as well. We're a lot smarter now. We're more nimble. I've got an excellent team around me. We've added some really intelligent people, and I think we're in a good position now.
Awesome. Good stuff. So let's dial it back even further. And you and I have spoken in the past, and you are a self-described nerd as a kid. You were not your average kid. You were collecting coins, collecting pennies, all these little things as a child, and which has led you into the commodities industry. So let's take us back to those nerd days. What was that moment where you're like, I love this and I want to do this forever? Because for most kids, they find something as a child, whether it's a sport or a hobby, and they're like, I want to do this for the rest of my life. And obviously for many, it doesn't happen. But for you, James, it did.
It really did. Growing up near Green Bay, of course, my dream was to become the quarterback for the Green Bay Packers. Once I started throwing a spiral and it was like more like a duck than a spiral, I started realizing that that's not my future. So I played football until senior year in high school. We went 1-7, so I was pretty proud of that. I started coin collecting when I was about 12 or 13 years old. And for some reason, these shiny little shekels really appealed to me. And then I realized that coins that were minted before 1964 contained real silver. And for some reason, this was just a great appeal to me. I started collecting silver coins, silver ingots, silver bars, and I was amassing these with my jobs, picking cherries in the summer, shoveling snow in the winter, and I was collecting all the silver I could get my hands on. Silver at the time was worth around $7 or $8 an ounce. 3 or 4 or 5 years later, as my collection is growing, silver traded up to $24 an ounce.
Wow.
And I realized that this was my first investment that I've ever made. And it turned out quite well. And I thought, I'm going to be likely trading commodities and not playing for the Packers.
Yeah. And it turns out like you made a good choice, because you probably would have been stopped by Brett Favre or Aaron Rodgers along the way. So you probably weren't going to beat those guys. So it kind of all worked out for you, James. And so we talk about this, taking this passion into a career. How do you do that? Like at what, like, did you know like what schooling you needed? Like how did you inform your, how did that inform your journey to becoming a professional and becoming, like I said, the go-to guy in commodities?
As soon as I could open a commodities account, I did that with a firm in the Midwest, where they often traded grains and oil seeds and things like this. And my background, being from the Midwest, you just naturally learn a little bit about harvest times, whether there's a drought going on or whether it's raining a lot. And as soon as I opened a commodities account, I found that there was a drought developing in the Midwest. I took, I believe, a $6,000 investment, and I put it into soybeans because I noticed how dry it was out in the country. And while no one else was really seeing this, I was in the Midwest. And it turned out that 1983 was one of the hottest, driest summers in the Midwest in decades. And the $6,000 investment turned into $40,000. And I was pretty much hooked from there. My broker at the time said, James, how would you like to work for us? How would you like to become a commodities broker? I think you have what it takes. And that's what I did.
Wow. It's almost like it's almost like a sports story of like, hey kid, you're ready to step up into the big leagues. Was that intimidating? I know there's much been much debate about the sort of imposter syndrome, but when you finally became a broker, like, oh my God, do I know what I'm doing here? Did you have to fight that early on?
I did. It was the coolest thing, having people have their investment on your desk instead of investing your own money. That certainly took some getting used to. Right out of the gate, I had a client from Nebraska, of all places, also growing and trading grains. And some of my first trades, he had 13 winning trades in a row with my recommendations. And I said, well, I was a little bit nervous. I said, yeah, I think I'm cut out to be doing this.
Wow, that's so cool, so cool. And so, not only did you end up doing it, you had an amazing run with it, and still do. Written a couple books. You've literally written the book on commodities. Your first book, The Complete Guide to Option Selling. So, tell us about some of those principles in selling options, because folks popping this on may be interested in commodities in terms of just like investing in it, but some may be interested in making a career out of this, like you did. So, talk about those principles of option selling.
I think covering commodities is quite interesting because if you're to watch CNBC or Bloomberg or Fox Business, there's probably 500 different analysts that they bring on to talk about Apple stock and how many phones are being sold in China this year, or how many times is the Federal Reserve going to reduce rates going into the new year. Analysts like that seem to be very plentiful. Anyone who's interested in getting involved in commodities, there's only a handful of people that are considered experts or special analysts in this industry. And I think it's really the wave of the future. Stocks, I think that they've been looked at and invested in every which possible way, but option trading and in commodities especially is really, in my opinion, thing of what's coming up right now. As far as volume and trading and precious metals, that's so exciting right now. Gold's trading an all-time high. Everyone seems to have an opinion of crude oil and where it's going to go. Cocoa prices hit all-time record highs this year. Orange juice hit all-time record highs this year. Cattle prices hit all-time record highs. So there is room to be a commodities broker, and perhaps that might be a good place for people to get involved with instead of becoming yet another stockbroker trying to figure out the latest AI buy.
Okay, and before you jump into the why the book, you mentioned the fact that your club of commodities brokers and experts of them, it's small, and stockbrokers is a dime a dozen, part of the pun. Why is that? Do you think? Do you have an idea as to why it is such a small but mighty group?
Basically, in commodities, you need to follow what the fundamentals are. Generally, when the stock market's going up, you can practically pick any stock and it'll do well. If the stock market's falling, it really doesn't matter that much which stock you picked, you're probably losing in. But commodities have such a different pattern as far as fundamentals. Orange juice has nothing to do with the price of silver. Crude oil has nothing to do with the price of wheat, and so on. So some of these markets can be rallying, some of them can be going down. And whether the economy in the United States or elsewhere is doing well or not, commodities have a life of their own. If the supply is down, the price is going up, and it doesn't matter what the stock market's doing. They all have personalities, and we've been trading them for over 3 decades now. And you get to learn what they're going to do sometimes before they even travel in that direction.
Wow, it's so cool. I never even thought about that, because say if you invest in tech, say if you've got all your eggs in one tech basket, if something happens in the industry with another, there's a ripple effect that affects all of the companies. And if you're involved in commodities, like you said, they don't really intertwine, which it's brilliant. I never thought about it that way. So let's go back to that first book. What was the inspiration for it, and what did you hope people would get from it?
We started trading options on commodities in around the year 2000, 2001, 2002. And what we learned was the fact that when you purchase an option, whether it's a call and you're betting on the market to go up, a put, you're betting on the market to go down, they often expire worthless. What we found out is, let's say you buy a corn call, which you're betting on the market to go up, and lo and behold, corn goes up, but it didn't go up far enough. It didn't go up fast enough. And the option that you bought expires worthless. I'm thinking to myself, who is selling these options? Because they almost always go to zero. And it turned out that 82% of the time they do go to zero. So instead of predicting where the market's going to go, you're betting on where the market's not going to go. And McGraw-Hill heard that that's what we were doing. And they approached us in 2004. And we wound up writing 3 different editions of the Complete Guide to Options and Selling. And 20-something years later, they're still in print. They're in 7 different languages in approximately 9 different countries. And people are still reading it. They think it's a great investment tool to participate in commodities.
Wow. And, like the old Ferris Bueller line, life moves fast. 20 years. does that, what you wrote 20 years ago, still hold up today? Is it just the basic principles, or are there some things that are like, oh wait, this is a lot of data, but like the gist of it is still there 20 years later?
It is.
Wow.
The fundamental factors that move commodities and the reason why you buy and sell options on commodities or stocks has not changed. There are probably a dozen now books that are trying to describe the similar fashions of how to trade using options, but we were one of the first. And the fact that we're still selling thousands of books and people are still contacting us saying this is like the best investment book I've ever read, which is just amazing to me because my partner and I at the time were not writers. We were investment traders in commodities, but we did a pretty good job writing it, and it's still in print. And that's pretty cool.
That is very cool. So talk about your jump from being a broker to what's now known as an influencer. 20 years ago, the word influencer was not a thing, James, but now it is. But you essentially became one. You became the go-to, like you said. Media companies would hit you up for quotes, get some insight on it. When did you realize that you were, and in the world I come from is being an authority in your field, but when did you realize that you were an authority, and when you became like now an influencer? Like, was there a certain moment, like a call you got, like, oh shoot, people really want to know what I think about all this?
There were periods of time, 2014, 15, 16, where I'd be watching the screen, I'd be watching a position that we have on, and gold would move $20 in a particular day, which isn't a large move, but it's substantial. And I would wait for the phone to ring because I knew that CNBC, Fox, or Bloomberg was going to want to talk about why did gold go up $20. And once that happened, like time and time and time again, I started realizing that we're probably the go-to people in the industry. I recall being up to dinner sometimes at 5:30, 6:30 at night, and my phone would ring, and it's someone from overseas. Did you see what just happened with OPEC? They just made an announcement on, cutting production or raising production. And I'd be sitting out for dinner, and this is someone from Reuters, and is about to hit the news wire as soon as I get done speaking. And these are thoughts, certainly, that made me believe that I was the go-to guy. I recall one situation where a hurricane, of all things, is bearing down in Florida, and hurricanes can change the production of oranges, of course. Oranges can get knocked off trees, and the price of orange juice spikes the next day. My wife and I are watching the spaghetti plot. Of course, that's the cone as to where a hurricane is coming. It was heading right towards Tampa, where we live. And lo and behold, CNBC that day wanted to bring me on to talk about the price of orange juice and what the hurricane was going to do to it. And my assistant told CNBC, well, James, of course, always appreciates being on your show. However, he and his wife are evacuating, which is mandatory in the Tampa Bay area. And they said, yeah, but we'd really like to have him on. But he's leaving, so he can't. So my secretary said to them, well, James can't. He'd like to maybe sometime in the future. An hour later, CNBC calls again and wants to know if I can perhaps just squeeze it in before I get to the airport. And I told my secretary at the time, and she said, James really can't. He's on his way to the airport. They hung up. CNBC calls a third time and says, well, we looked up where the studio is, and it's on the way to the airport. So maybe James can stop by, and whatever time he gets in, we'll break out of whatever we're doing, whatever commodity or stock we're following, we'll put him on. Unfortunately, James is at the airport. He's on his way. He's flying up north. I land in Cleveland with my wife. 2 hours later, my phone rings, and Alicia says, James, it's CNBC again. And I said, I'm in Cleveland. She said, CNBC knows that, and they set up the studio in Cleveland for you to come on and talk about orange juice.
Wow. I mean, no offense, James, but couldn't they find somebody else? Why they put you through
I told them. I've got 5 names of people that know orange juice extremely well, and I offered to give, and CNBC knew that, and they wanted us, and they followed us all the way to Cleveland to get us on.
Wow. Great story. Thank you for sharing that one. All right, so we talked about book number 1. Book number 2 is going to be Reflections of an Option Seller. I feel like it is almost like sort of the next step of the journey. The first one was just explaining how it works, the principles, but now this is, reflecting on your career. So what's the big takeaway for folks on this one, James?
Bringing up Ray Dalio again and principles in his book, he talks about reflecting and reflections on the business that he's in and any mistakes that he had made. And that word just really resonates with me. We're reflecting on what happened in 2018. We thought we were pretty smart before that. We think we're pretty smart now because, in fact, we had the lesson of a lifetime. And that's what we cover in Reflections of an Option Seller. It's us coming back into the business. It tells any previous clients or anyone who wants to read about it exactly what happened. I just want to bear all about it. Eventually, or initially, I was writing it for my own help as far as understanding, the crash that we had in 2018. I wanted to understand it, dissect it, perfect it, make sure it doesn't happen again. And after about a year or two of writing down lessons that I learned, I said, this could become a book. And about a year and a half later, so 3.5 years of reflecting, the book was produced and written, and it's coming out very soon.
That's awesome. That's awesome. And we opened up the show talking about what happened in 18, and you talk about it in the book. But how do you thread the needle of being aware of what happened and people wanting to talk about it, but also moving on? Because as you know, 18 will always be there, but you want to tell people, hey, listen, I know what I'm talking about here with commodities, and I have much to offer, but I still understand that people want to talk about that. So talk about that sort of like in between space you're living in at the moment.
Well, the majority of investors know that it's possible. It happens with GameStop. It happens with Bridgewater. Some of the most intelligent minds on Wall Street with the best pedigrees ever had a crash. And either you were made to be in the business and you got smarter and better for it, or you're not. And that's where we're at right now. We have opened up our brokerage to a select number of individuals of high net worth caliber. And so far, things are going extremely well. We think that the majority of investors realize that some of the best in the industry had to have their crash. We did. I wish it happened a little bit earlier in my career, but it happened when it happened. And we think we're going to be a great firm. We think we're going to be a great investment for people who are seeking out alternatives in commodities and in options. And we welcome it. And I think we're going to do quite well.
Yeah. And you obviously love commodities. We talked about, being a little kid, finding silver and old coins. But obviously you went beyond that and all the other commodities, whether it's coffee, OJ. Why? I mean, you seem like you probably could have been your basic B stockbroker, but commodities. Why? And the name of the show, why commodities? Why do you love it so much?
Commodities are interesting. They're something that we eat, breathe, touch, or put in our automobile practically every day. We follow about 12 commodities, so we're not learning a whole new the group every year. Or AI comes along, you have to learn about AI stocks. iPhones come along, you got to learn about Apple stock. Energy companies, you got to learn about OPEC. And we've been following the same 12 commodities for over 30 years. They have a personality. They actually have fundamental rationale for going up or going down. You're not trying to figure out the PE that's correct for the stock market to go up. When interest rates go down, the stock market goes up. When interest rates go up, stock market goes down. It is difficult to understand that as an investment long term. If you understand raw goods like crude oil, for example, you have a really good idea of what the market's going to do, not on a daily basis, but you have a general idea of what prices should be. And following the same 12 commodities as long as we have, you get to know them extremely well. There will be a report that comes out for the wheat market, and everyone rushes in to buy it, and you say to yourself, that wasn't bullish. The Wall Street Journal said it was bullish. They said on TV it was bullish. And subsequently, weeks later, it's like, no, the market fell. And it's like, God, there was that bullish factor, but without the knowledge, without the experience, you wouldn't know that. And that's why I'm really growing to love a lot.
That's so cool. You talked about the differences between the stock market and commodities, but I wonder, can you read the tea leaves in commodities that can also have like a butterfly effect in the stock market? Is there any, like the old Ghostbusters, and I apologize for all these movie references, but do these streams ever cross in terms of like commodities and your typical stock market?
They're really separate. There's small sectors that will be the same. If crude oil goes on a real large rally, certainly petroleum companies are normally going to do quite well. And still, you have to pick the right one. Some of them will be hedged. And the fact that oil is going up, they might not be making money because their production figures have already been sold. There's just so much criteria in the stock market. Generally, it's either going up or it's going down. And they're really, while there's different sectors, there's different ways to try and diversify. Generally, when the market's falling, your stock is falling. And in commodities, it's simply not like that. Of the 12 that we follow, maybe 6 might be going up and 6 might be going down. And they have rational, fundamental, reasons and logic for them doing that. It's really easy to separate commodities versus stocks. They don't have a strong correlation. They certainly don't.
And diversification is a big thing in when it comes to stocks. Is the same go for commodities? Like if you get into the commodities game, you're best to be involved in the dozen or so that you guys specialize in?
Generally, we're watching a dozen. However, as far as there being opportunities in 12 at one time, there certainly isn't. It's nice to be in 5 or 6 commodities at one single time. Generally, that's pretty good diversification. What you might want to do is keep powder dry, that if opportunities come along in 2 or 3 other commodities, you might get in as many as 7 or 8 that way. You want to manage your portfolio with as much diversification as you can without being diversified simply to diversify. So
Good. And so the economy is booming. Some may say it's not, but if you look at the stock market, if you look at people's 401ks, it's doing well. And let's talk about what's booming in the world of commodities. Gold is doing right well as we're taping this, correct?
yeah, gold's doing extremely well. Some of the fundamental factors are, we have some of the largest national banks in the world that have been accumulating gold at a record pace. Germany is a large buyer, China's a large buyer, Russia's been a large buyer, the United States has been a large buyer. And those are considered strong hands. Those aren't speculators. So when world banks around the globe are purchasing gold, they're not just in on Thursday and out on Friday. They're in it to stay for a long time. Records have been set for buying gold the last 2 years by central banks around the world. Of course, interest rates are about to come down. Generally speaking, when interest rates are going down, gold is going up, and people are anticipating that right now. And of course, diversification. The stock market is at all-time highs. It's a bit of a question as to whether the economy is justifying that, or if people are just looking for a place to be because interest rates have been so low for so long. A lot of people are in stocks for that reason. Gold is a great diversification. It's been around for a very long time. And likely over the next year or 2 or 3, it's probably got higher to go in our anticipation.
Nice. And the other one that's doing pretty well, cocoa. Talk about coffee.
Yeah, cocoa and coffee both at all-time record highs just recently. The interesting part about cocoa and coffee, if the price goes up, people still want it. They don't start drinking tea instead of coffee. The demand for that is pretty much inelastic. So if coffee prices are heading higher, I don't think a lot of people think, well, I can't have coffee today. I'm going to have orange juice or tea or something in its place. Cocoa, coffee, orange juice also hit all-time record highs this year. And I think commodities are probably the place to be as the world expands in population. And a lot of the Eastern countries get westernized. They like some of the luxury goods that Americans and Europeans have enjoyed for a long time.
Is there a favorite of yours that you particularly are like, oh, I always have to have my hand in that pot? Is there one that's consistently, it sounds like you're bullish on gold and such, but like, is there one that you're like, oh man, I really like to be active in this sector?
Two, really. The price of precious metals, we've been extremely Lucky yet over the last couple of decades, for whatever reason, perhaps when I was trading silver when I was 12 and I was successful then, I have a lot of confidence in my trading of precious metals now. Another commodity I really like to trade is coffee. We know it like the back of our hand, or at least we think we do. We have boots on the ground in Vietnam and in Brazil. We need to know how the crop is doing or if it rained in the right location. We can make a phone call and find that out. And we get pictures of how the crop is doing. And coffee is certainly a big favorite of ours. We've done extremely well over the years trading it. And we have a whole lot of help in some of the largest countries that produce most of it, so that we don't have to get on a jet and fly to Vietnam. We can take a look at it just by using iPhones with our friends that work and live there.
That's so cool. Now, I know a lot of your clients are high net worth individuals, but for someone who's not, say this guy, what's a gateway into commodities? Like, we all know the Robin Hoods of the world, and we can go through our 401ks and buy stock. But like, how does one who wants to just maybe just start, for lack of a better word, dabble in commodities? What's a good gateway? What's a great place to start, James? Besides, talking to you and the folks at your company.
There's something called the Commodities CRB Yearbook, and it talks everywhere from asphalt to zinc, and you can learn all you want to know about commodities and everything in between, where it's grown, where it's produced, who are the largest consumers, what are the growing seasons, you know, which states in the United States have the largest mines for silver. Is copper made in Peru or is it in Arizona? This book is basically the Bible on commodities. So give yourself a little bit of an education is what I would recommend, and start trading with a small trading account, or you can do paper trading. The Wall Street Journal, of course, has a small snippet each day about a commodity that it's moving and why it might be moving. It's really easy to get involved with it, to learn a little bit about it. And the more comfortable you get with it, you can realize that this is something for me, or it's something I should just keep as the dabble component.
And in terms of the high net worth folks, what would inspire them to get involved in this? Because obviously, by this point in their lives, doing pretty good. Why is a good time in their life to get involved in commodities?
Diversification. I know of a lot of high net worth people. They're not even in the stock market. They don't understand why it's at all-time highs. They don't understand why it's going up. They may have some position in the stocks. They may have some position in real estate. But diversification and owning raw goods for a lot of high net worth individuals, it's somewhat of a fascination, but it's also something I think that they understand. If you're at a cocktail party and you overhear someone talking about commodities, if you do, everyone seems to have an opinion on the price of crude oil, the price of gasoline. It's extremely high. Well, here's why it is. The price of gold is going up. You'll hear that conversation. People like being right about something what they understand. And as far as the 500 S&P stocks, that's a lot to sift through, and a lot of people don't necessarily know the intricacies as to why one stock does better than another. Commodities is a lot easier to nail down on what the fundamentals are, and I think people enjoy understanding what they're invested in, wealthy people as well.
Nice. All right, so this is the first episode of our series of Why Commodities. We're going to have a bunch of guests that are experts in this field involved in commodities. You talked about the why of the book. Why this show? Why is it important for you to do this now? And what do you hope people will get out of tuning in, watching? What would you hope is the end goal with this show?
I think a lot of people have always heard about commodities. They hear the market has hit really high levels, really low levels. It's something, it's more of a fascination, I think, that people have with commodities, but they don't know enough about it to either be invested in it or diversified in commodities. That's what this show is going to do. After our several podcasts over the next several months, I think a lot of people want to understand more about what a commodity is. It's something they eat, breathe, and touch on a daily basis. And when prices go up, a lot of people wonder, well, why did that happen? Cocoa prices hit all-time highs this past year. And can you imagine, being able to talk at the bubbler that, I made a fortune trading cocoa this year. I think a lot of people find that interesting. And I think over the the next several podcasts that we do, I think we're going to make some commodity traders out of it. They don't certainly have to trade with us, but it's certainly something that I think a lot of people are going to get a lot out of, and they're going to get quite an education at the very least.
Nice. Well, I'm looking forward to it because I'm already like starting to make notes. Like, hey, maybe I'm not a high net worth individual. Maybe I could get something out of this. So I'm looking forward to learning from you, being your Yoda to Luke Skywalker over here in terms of commodities. So looking forward to that. You mentioned working with you. If folks wanted to work with you, where do they start? Where do they look, James?
Alternative Options is our company. We are trading options on commodities. And they can find us at aocta.com. Of course, they can read the book that's coming out soon. Hopefully, that'll be on several shelves all around the world. They can contact us. We're easy to find.
Nice. And lastly, we opened on a personal note. Let's end on one. One of our favorite people is Krista Cordier, and your wife. And what has it been like to have her by your side through the ups and downs of the last decade for yourself? Just talk, you weren't expecting this question, so do the best you can with it. But what's it like having someone like that at your side, riding the highs and the lows of your life, James Cordier?
Krista has been my rock over the last 8 years. That's how long we've been married. Fortunately, Krista was in the financial sector prior to us meeting. And when we were delivering alpha for our clients, she noticed that and witnessed that for a few years. And she was reading the Wall Street Journal with me. She was reading our complete guide to option selling with me. From time to time, she'd open up the book and say, James, what is this? What is contango? It is very nice having a soulmate and a partner who understands the business. They understand what you're going through when things are going extremely well. If you have your crash, like we did, she's been extremely helpful. She's been just a rock. She said, James, you're smarter now, and we're going to do this, and the future is extremely bright. And she's been just a great help. She is the love of my life. Very lucky to find her, and she is working with me on a daily basis. Did you notice this? Did you see that? She watches the financial news networks as often as I do. And if I miss something, she brings it to my attention. She's been just wonderful.
That's awesome. I wonder if they'll do a study, James, of the divorce rate of after crashes, because I'm sure for many crashes we talk about it. I'm sure it's hell on marriages. But luckily you found a good one there, and everything's going well. So I'm looking forward to this journey. Like I said, I'm hopefully by the end of this, or I will be the next James Cordier in terms of the go-to. People will be tracking me down in airports about commodities, but looking forward to it, James, and I'll see you next time on Why Commodities.
Joe, it's my pleasure.